This crash course is designed to show you the basics of chart reading and give us the ability to start to think about a strategy to enter or exit a stock. When a stock moves upward, also referred to as an uptrend, it rarely moves straight up. It moves up and then takes a break, moves up and takes a break, etc. Chartists like to look at the peaks in this uptrend for confirmation. As long as the peaks, sometimes referred to as the highs, are getting higher than the last one, then it is confirmed that the stock is in an uptrend. We would also like to see that the valleys or the lows are also getting higher. Here is what it looks like on a real chart. You can see that the lows are getting higher and the peaks or the highs are also getting higher. Clearly, this stock is in an uptrend. With an uptrending stock, some like to draw trend lines to give an alert as to when the stock might stop going up and begin a new downtrend. A trend line is drawn by connecting the bottoms or the lows in an uptrending stock like this. As the stock begins to move up steeper, you can revise your line like this. If the stock begins to trade below this trend line, it may be a sign to get out of this stock. A downtrending stock is very similar. It usually moves down, takes a break, moves down again, takes a break, and so on. Here is what it looks like on a real chart. You can see that the highs are getting lower and the lows are also getting lower. Clearly, this stock is in a downtrend. Drawing trend lines on this chart is a little different. In an uptrend, we draw the line connecting the bottoms or the lows. In a downtrend, we connect the tops or the highs. Once again, as the drop becomes steeper, you can revise your line. If the stock begins to trade above this trend line, it may be a sign that the stock will begin a new uptrend. Chartists like to look for something called support and resistance in these charts as possible turning points in an uptrend, a downtrend, or even a sideways moving market. The general hypothesis is this. When price hits a level and then moves down very quickly from that level, the chart tells us that this price is too expensive. The next time the price reaches this level, it is likely to drop. This level is called resistance because it is resisting the price or stopping it from going any higher. The concept of support is the exact opposite. When a price reaches a level and then moves up very quickly from that level, the chart tells us that this price is too cheap. And the next time the price reaches this level, it is likely to rally once again. Here is an example of resistance on a real chart. You'll notice as the price returned to that level, it was not able to go any higher. And here is support again. The price rallied when it got to that level the second time. You've probably noticed many other levels that didn't work. Don't worry about those. These concepts we are showing you are for the purpose of providing the basic understanding of charts. As you move further along through the videos, you will see our methodology which improves upon many of these concepts. So let's recap what we have learned. We are now able to qualify a stock in a downtrend, a stock in an uptrend, and we have an understanding of support and resistance to prices. In the next videos, we will explore how to improve this concept of trend lines by using something called moving averages. See you there.